Any investor would want the best companies to hold their precious dividends. However, it's not easy to find that one stock that will lead us to have fruitful investments. With that in mind, it's not a bad idea to get inspiration from some influential investors out there. Who knows, maybe their selections can lead you into making millions too. Hey, welcome to Stock Market Mate. Today we'll talk about Ray Dalio's top 10 dividend stocks for 2022. Before we get into it, subscribe to the channel and hit that notification bell to help us beat the YouTube algorithm. If you're done with that, then let's get right into it. Introducing Ray Dalio. Billionaire Ray Dalio founded Bridgewater Associates in 1975. This is the world's largest hedge fund with more than $150 billion in assets. Dalio himself has a net worth of about $22 billion, according to Forbes. Bridgewater's popular Pure Alpha 2 fund struggled during the wild market swings in 2020, generating a 12.6% loss for the year. However, Dalio and the Pure Alpha 2 fund have thrived in a weak market environment in 2022, posting an extremely impressive 32% gain through the first 6 months of the year. Here are Bridgewater's 9 top stock and fund holdings, according to its latest 13F filings with the Securities and Exchange Commission. Number 10. Costco Wholesale Group. Costco is a leading membership warehouse retailer. In May, Costco reported fiscal third quarter same-store sales growth of 10.8%, and its subsequent monthly updates suggest sales growth has remained strong throughout the summer. Costco shares aren't exactly cheap, trading at 38 times forward earnings estimates, but Dalio likely sees how favorably Costco's double-digit revenue growth compares to competitors such as Walmart Incorporated and Target Corp. Dalio added 23,331 shares to Bridgewater's Costco stake in the second quarter. The firm now holds about 1.21 million shares of Cost stock worth around $580 million. Number 9. Target Corporation. Target Corporation is a Minnesota-based general merchandise retailer that owns stores in all 50 U.S. states. The company sells a variety of food, household products, clothing, and electronics. In August, D.A. Davidson raised its price target on the stock to $203 with a buy rating on the stock. The firm expects the company to bring its margins back in line with the previous years by Q4 2022. In the second quarter of 2022, Bridgewater Associates increased its position in Target Corporation by 18%, which brings its total stake to more than $220.3 million. The company holds 0.93% of Ray Dalio's portfolio. As of the end of the second quarter of 2022, Insider Monkey's database contains 46 hedge funds holding a stake in Target Corporation, a quarter down from the prior 50. The combined value of these bets is over $1.2 billion. Number 8. Procter & Gamble Corporation. Procter & Gamble is a blue-chip consumer products company and owner of popular brands such as Pampers, Tide, and Bounty. It is also Bridgewater's single largest individual stock holding. PG shares have only slightly outperformed the S&P 500 so far in 2022, generating a total year-to-date loss of 7.1% through August 22. Consumer staple stocks like Procter & Gamble are considered solid defensive investments during periods of market volatility and uncertainty. Proctor reported 3% revenue growth and 5% net income growth in the most recent quarter. Bridgewater owns 6.74 million shares of PG stock worth about $970 million. Number 7. Walmart Incorporated. Walmart Incorporated is among Ray Dalio's top 10 stock picks for 2021, and it is one of the most favored stocks of the billionaire hedge fund manager. This is because Bridgewater Associates has increased its position in Walmart by 120% during the fourth quarter to 3.84% of the overall portfolio. Shares of Walmart have outperformed the broader market trends in 2020, but underperformed since the beginning of 2021 due to easing social distancing policies. In addition to share price gains, Walmart has also been returning hefty cash to shareholders in the form of dividends. The company currently offers a dividend yield of 1.5%. Number 6. Johnson & Johnson. Johnson & Johnson is a blue-chip global pharmaceutical and healthcare product producer. Dalio first started loading up on Johnson & Johnson during the initial US COVID-19 outbreak in the first quarter of 2020. Johnson & Johnson's revenue growth slowed to just 3% last quarter, but the company's plan to spin off its consumer business into a newly public company by late 2023 could serve as a bullish catalyst. Bridgewater trimmed its exposure to Johnson & Johnson in the second quarter, selling 12,369 shares. However, the firm still owns 4.33 million shares of J&J stock worth more than $769 million. Number 5. General Mills Incorporated. General Mills Incorporated is an American consumer food manufacturer. Bridgewater boosted its stake in GIS by 1,277%. Its current position is valued at $18.7 million. There were a total of 37 hedge funds with bullish GIS bets at the end of September. Year to date, the stock returned about 19.5% and is currently valued at $36.8 billion. The company is emerging from the pandemic stronger and more profitable. On September 23rd, the company reported strong 2021 Q1 results. Net sales have increased by 9% to $4.4 billion in operating profit, by 29% to $854 million. Another good news for GIS investors is the 4% increase in the quarterly dividend to $0.51 per share. General Mills, together with its predecessor company, is proud to have paid dividends without interruption for 122 years. Number 4. Starbucks Corporation. Starbucks Corporation is an American multinational coffeehouse company. The company was part of a 55 hedge fund portfolio in the second quarter of 2022, compared to 58 in the previous quarter according to data from Insider Monkey. The total value of stakes owned by these hedge funds is more than $1.43 billion. D.E. Shaw and Ken Griffin were the company's most prominent stakeholders in Q2. Bridgewater Associates opened its position in Starbucks Corporation during the fourth quarter of 2010, purchasing shares for $690,000. In Q2 2022, the hedge fund held more than 3.2 million shares in the company, valued at $247.7 million. The company holds 1.04% in Ray Dalio's portfolio. On June 29, Starbucks Corporation declared a quarterly dividend of $0.49 per share, in line with its previous dividend. The company has been continuously increasing its payments for the last 11 years. As of August 29, the stock's dividend yield came in at 2.33%. Number 3. CVS Health. Dalio made a notable increase in one of his larger positions, CVS Health. CVS stores offer a range of home healthcare and hygiene products, along with basic groceries, pharmacy services, and some more specialized prescription medical equipment. The company has brought in more than $130 billion in annual revenues over the past 3 years. The dividend here is 50 cents per share and has been held steady at that level for over 3 years now. The payment annualizes to $2 and gives a yield of 2.7%. Dalio's Bridgewater bought 320,039 shares of CVS stock last quarter, expanding a test position that the firm already held. The buy boosted the total holding dramatically to 333,804 shares, which are now worth $24.87 million. Bridgewater went from 1.29 million shares of CVS in the first quarter to almost 3.15 million shares at the end of the second quarter. That's a 160% increase. At today's prices, assuming Bridgewater has not increased or decreased its position, it would be worth roughly $322 million. CVS has performed much better than the other names in this list. The stock suffered a peak-to-trough loss of just 26.5%, in line with the S&P 500. It currently sits just 8% below its all-time high. Number 2. MasterCard. Dalio increased his position in payments giant MasterCard by over 1,200% in the second quarter of 2022. During the quarter, the stock traded for an average price of $344 per share, which is 15% more expensive than where the stock trades at the time of writing. MasterCard is one of the most dominant card payment companies in the US and is in a duopoly with rival Visa for debit cards. Over 72.5% of Americans have a credit card. Visa has a 48% market share and MasterCard has a 38% market share. Over in Europe, Visa has a 60% market share and MasterCard has a 40% market share. MasterCard has been one of the most high-quality investments for many decades and is showing no signs of slowing down. The company generated revenue of $5.5 billion in the second quarter, which beat analysts' expectations by $236 million. In addition, the business generated a second quarter net income of $2.3 billion with earnings per share of $2.34. These strong numbers were a surprise to investors who expected a slowdown in payments due to economic uncertainty and inflation. Number 1. Nike. Nike stock is a company designing, developing, and marketing footwear, apparel, equipment, and accessory products. It has increased by 6% over the last 21 trading days and currently stands at around $122. It should be noted that the broader S&P 500 returned to marginal growth over the last month. With its recent Q3 2022 earnings report, the company demonstrated its ability to grow despite the worsening supply chain situation and lockdowns in China. It is worth mentioning that Greater China makes up close to 20% of the company's revenue and generates around 45% of operating profit. In the recent Q3, Nike sales in China fell 8% YOY. Still, the company managed to post a top-line rise of 5% YOY to $10.9 billion. Based on our machine learning analysis of trends in the stock price over the last 10 years, there is a 67% chance of a rise in Nike stock over the next month. Well, that's about it for today. If you found this video helpful, kindly click the like and subscribe button. Also, you might want to leave a comment below. We love hearing from you. Thank you for watching, and we'll see you in the next video. If you enjoyed this video, you're going to want to watch one of these two videos right here. Enjoy!